Hello, everybody. Welcome to the live stream today. I'm a little bit earlier than usual. We usually obviously go in at around about 2 p.m. GMT, but I'm going to do 12 today. Obviously, we've got the ECB announcement coming up in about an hour or so. So I thought I'd jump on a little bit earlier just to kind of give a little brief of some key levels to watch out for on Euro. Maybe do a little bit of a breakdown of some of the Euro charts, and then just go across some of the other pairs that we've been watching recently and things like that. So I will cover the news first of all, and then we'll go over to some other charts of interest. And yeah, let's just go straight in. So obviously I'm on Euro US dollar here. This is going to be greatly impacted by the data coming up this afternoon at 1:15 p.m. We've got the ECB interest rate decision and monetary policy statement. So that's going to be watched quite closely by market participants, expecting a hold at 4.5%. Are we going to see any kind of dovish language here? I can see the German IFO business climate came out a little bit under expectations at 85.2 today. So that is a sort of problem area for the Eurozone at the moment, the German economy. So that could be quite interesting to see if we see anything in the monetary policy statement from the ECB on whether they are going to do anything different. Are they going to think about hiking interest rates? Sorry, not hiking interest rates, cutting interest rates in the future, or are they going to follow pretty much every other central bank to hold interest rates as is? We then follow that data on at 1:30 p.m. We've got advanced GDP data coming out of the US just ahead of the US session, and that is actually forecast to show quite a significant sort of drop there from 4.9% to 2%, and unemployment claims are expected to come in a little bit higher at 199 over 187. The unemployment claims will be interesting to watch. We've actually seen that come in a little bit higher on the previous. If I just open this up and let's get a graph view of this, we were getting some data recently where we had a few sort of surprises in there. So we had this sort of 200 above 200 on the sort of moves there. So it came in a little bit under the expectations. So it'd be interesting to see, do we get something similar today? We are forecast to obviously come in at 199. If we stay below that sort of 200 area, how is that going to impact the US dollar going into today's session? So yeah, I'll be closely sort of keeping an eye on that as well. We then got the ECB press conference coming up at 1:45. Again, it's going to be interesting to see how that data or how the market interprets any kind of drops from there as well. So let's go to Euro. It's probably going to be a very range bound day until we get into that data anyway, and then we'll go from there. So hi Vincent, I hope you're doing well, mate. Anyone else in as well, drop a hello. Any kind of chart you want me to cover in this session, please let me know and we can do that. But I like the structure here on Euro. If we look at it from just a technical analysis point of view, the market is in this sort of nice structure where we kind of trade lower. We've got this kind of consolidation. We break out of that again. We've got this consolidation sort of holding. My overall feelings towards Euro dollar is that we could head towards these swing lows here. That's based more from the higher time frames. Look up to the weekly chart. And what I'm looking at is, the weekly is technically starting to kind of make these kind of high, low situations, which does suggest obviously some bullishness. It suggests that maybe we're going to see a move up into sort of these highs at the 1.12. However, I am pretty bullish dollar recently, and which means that I'm looking for Euro dollar to maybe come and trade back down towards this key swing low here, which formed back on the 4th of December, around about the 1.0750 level. Now, looking at the weekly closes, they're not aggressively bearish. We can see that obviously that was a very strong bearish close, followed by sort of a week of range bound movement. We then had a bearish close as well, but we haven't seen anything close below this strong bearish close here, which I would want to see if I want to be short in this particular market. I would want to see this kind of close lower and be aggressively short coming into this level. Doesn't mean price isn't going to get there. Doesn't mean that price can't move higher either. Obviously, it'll be interesting to see like I said, how the market interprets the data out of the ECB. But if we just go and play a little bit of a volume game here, I'm just going to go from current swing high down to swing low, and we can see there's obviously not a lot of volume above this area here, which is around about that one area, which is going to be pretty crucial. I think this zone in here is going to be where the market would consider quite an aggressive move to the upside. So if we breach this kind of high area in here, or these zones, then I think we're probably going to see a big move back up towards the sort of 1.140s, even a move up into that 1250. If we can kind of remain below this area at the moment, we're sort of capped around this kind of area in here, which is around about that 0930 area, where the volume starts to pick up a little bit, which is this consolidation in here. The market's kind of staying below this area for now, and I think if it can hold below, then we may trade down towards that area where I feel that the market will push towards. Now, like I said, I like the idea of dollar bullishness at the moment. The reason why I like the idea of that is mainly because of the sort of data that's been dropping out of the US. Also, the sort of price action that we're seeing here as well. Very similar to Euro US dollar, obviously. Euro US dollar can be the sort of inverse to the dollar index because the euro is heavily weighted in the dollar index. But you can see we have a rally, consolidation, rally. We're getting a similar sort of consolidation here, which is the opposite to the euro. So if we do start to see any bullishness in the US dollar, which I was expecting this week, then I was looking for price to come more towards the sort of 104.20 area. So we'll see how that kind of continues to play out. We've got obviously a big bit of data coming out today, which could really affect how the US dollar and the euro move. So I'll be interested to see how it does play out this afternoon. But like I said, I don't usually get involved with trades around those events, so I'm not in anything to do with the euro. I am currently looking at a potential short on Aussie US dollar, but I'm not in anything here. We're still technically at this support point. I like the fact that price was below the 0.66 level here, and that we've kind of come into it, rejected, come into it, rejected, come into it, rejected. So I quite like the idea of being short Aussie US dollar as we kind of approach these levels here. But again, I'm going to see how that dollar data plays out, to be honest. I'll see how that reacts. Ideally, I want to be trading below this kind of zone in here, which is that 0.6530, because that just opens the door up to price coming to target a few areas. So if we breach this area, I'll be looking more for a bit of downside. Then other markets that were really on my radar, dollar Swiss long. I like the idea of being a dollar Swiss buyer. I'm not involved in anything here yet. I haven't seen any evidence to suggest I should be long here at the moment. We are approaching this 0.86 handle, which I quite liked the idea of being a buyer from, but I haven't seen anything yet to suggest that I want to be long there at the minute. So holding off on that one. Euro yen was the only other market as well. So we've got this kind of bullish sort of trend going on the daily chart. We broke this area of range. The market's making higher highs and higher lows. In this type of environment, I'd be looking to see if the previous high can act as support. Price has tested that. We have had a little bit of a reaction in this area. So if I look at the 4-hour chart, I can see that buyers came in at that 160 level and we've started to push higher. What I want to see is another test. Can price come back down? Can it test it? Can it reject it? I think if we do that, that would be a good foundation to see price try and trade back up to 161.50. So those are the markets that I'm really focused on at the moment. Like I said, the only markets that I really got in this week was a euro dollar short, which came here on that retest. So I shorted this move in there, ended up banking about a 4-to-1 on that move, plus a second trade which did 2-to-1. Other than that, I haven't really got involved with anything. So yeah, I'm just kind of waiting to see how the market does set up. If there's something for me, there's something for me. If not, then you know, we'll have to just wait and wait it out and see if there's anything going on elsewhere. We're going to take a look at gold in a minute, but I can see that Vincent wants to take a look at Kiwi CAD. I'm looking for a short. Let me just change the thing so you can see it a little bit better. Let's go take a look at Kiwi CAD then. So Kiwi CAD looking for a short. Okay, I've come to the chart already, and I can probably see why you're looking at that short. We've had this period of consolidation up here, a nice area of resistance. This actually formed from a weekly chart, and we were looking at the idea of price actually reaching this area of resistance at 0.8400 after we broke the 0.8200 level. And when we've reached that level now, we can see that price has just consolidated. There's been no real kind of wiggle room there. Again, we have to ask ourselves the question, you know, we're looking for a short Kiwi CAD. That's great. What does that mean for us? Well, we need to understand where New Zealand US dollar is, okay? And then we need to understand where dollar CAD is, because that is what you're trading here. You're trading these two major currency pairs against each other. So essentially, we need New Zealand US dollar to be trading to the downside, and we also need dollar CAD to trade lower as well, okay? Because that will give us the opportunity to see price trend to the downside. Now, from a technical perspective, that looks all good, because we can see that obviously there is a breakout. We came into this area of resistance. We've consolidated at resistance. We've then broke resistance. So that to me means that I would be looking more for downside just from a technical perspective. We have come into support though. We have come into that 0.8200. So there is a little bit of a sort of mix in terms of there's no real clear downside here at the moment. So if I was going to get short, my targets are going to be 8200, which means we need to get short on a lower time frame essentially in order to get any kind of good risk reward out of this move. Let's take a look at Kiwi dollar then. So, well, like I said, I want to see Kiwi dollar trade lower, and I want to see dollar CAD trade lower as well. That essentially drives Kiwi CAD prices to the downside. Now, New Zealand US dollar, yeah, it's been great. It's been moving to the downside ever since we kind of found resistance up here on the 28th, 29th of December. We've been trading lower. However, we're now at support. Now, we're not seeing very aggressive buying coming in here, so that doesn't necessarily make me think that it's a bad idea to short Kiwi at the moment, because if we were to see aggressive buying, really strong daily bullish candlesticks away, you know, like we see when price came into this area here, or big strong bullish push away, then great. But we haven't got that yet, so that tells me that maybe there is a lack of buying here on New Zealand US dollar at the moment. And that there may be an opportunity to see more downside potential, okay? The other thing we need to look at is dollar CAD. Where's dollar CAD positioned? Is it at support? Is it at resistance? So I can see we're approaching resistance. We're approaching 135.50, where you can see I've got an alert here, basically because we've got consolidation and a very aggressive breakout. So if I was to get a volume profile on here, you would see that there is a large area of volume at this point, okay? If I just highlight that over. So the way I kind of look at the market is I look at it in terms of volume. Whenever you see a pullback or a piece of consolidation, that is an area where market orders can build up before you see continuations, right? That's why people recognize sort of these types of patterns. They look more the fact that they look for then the breakout and then the continuations of those breakouts. Whereas I look at that as what's going on in that situation. There's buying and selling going on. Who's won from that area? Sellers have obviously driven price lower. So if price comes back, are those sellers that were active at that point, are they going to be active again? And if not, price could obviously push higher. If they are, we could see a continuation. That's what I'm looking at dollar CAD here as. Is this an area where sellers are going to get back involved in the market? And if they do, can it push price down towards 134.25? That being said, think about it in terms of Kiwi CAD now, right? So you've got Kiwi dollar. That is at a support point. okay, but not really seeing much buying going on. We've got dollar CAD at a resistance. So I would say that kind of makes sense to go and take a look at Kiwi CAD and say to yourself, well, we're coming into a resistance zone on dollar CAD, which means we could see a little bit of CAD sort of strength come into the market, because that's essentially what you're looking for there. You're looking for Kiwi weakness, CAD strength. So yeah, there is a good possibility to see a little bit of a drop coming in from here. Could it go a little bit higher? Yeah, because we haven't technically reached those zones on dollar CAD just yet. So there still could be a movement higher. But what you could do is just watch your lower time frames, okay? So you know I'm a big fan of like watching lower time frames, watching for price to break certain sort of levels. So on the hourly chart of Kiwi CAD, I can see that we're still technically trending up after breaking the multiple highs. So is there any reason to get short here right now? I would say no. Okay. What I'd like to see is if price pushes again, do we then get some kind of change in trend? Maybe a head and shoulders pattern, maybe a double top pattern, things that you're familiar with. If you do get any kind of breaks of lows and things like that, then that could be the driving factor that pushes price lower, right? You want to try and get in on where the price starts to make that trend, right? So it's very simple. It's essentially, you know, like we have up here, you know, price comes into this level, it still makes higher highs, higher lows. We make a new low there, which is good. It's a sign that maybe sellers are starting to get active. Yes, we push up and break that new high, but we get a bit of a false breakout pattern there. And then we drive lower and we start getting the lower lows and lower highs till it reaches support. Lots of choppiness going on there. Maybe the hourly chart's not the best to look at in terms of Kiwi CAD. But once we start trending, then look at the reactions from sort of the 50 MA. You know, nice little bit of movement there. So if we can kind of maybe see price trade a little bit higher, maybe breach below the 50 MA, maybe that could be something to kind of watch. Maybe a higher time frame would work a little bit better, because you can see Kiwi CAD can be a little bit choppy. And sitting through all that chop, you know, is not good mentally when you're in a position. Hopefully that made sense, Vincent. Krishna, welcome. Can you make more videos on physiology? You mean psychology and whatnot? Yeah, absolutely. Yeah, absolutely. I will make more videos about trading psychology. I've got a few videos up at the moment on trading psychology. One of the videos I got coming up as well, which is actually a recommendation from Vincent. So thank you, Vincent. I know you're in today, which is the sort of, I've already released that video. I might have already released that video actually, but just discretionary trading versus sort of non-discretionary trading and being a little bit more robotic. I still feel like discretionary trading is a bit better. So yeah, we did a video on that. I've got one about passive versus active as well. Trading. I think it's very easy when you are looking at the markets every single day to be a bit more of an active trader. And that doesn't necessarily mean the best results for somebody who doesn't maybe understand all the market dynamics that they're trading. I think to be a little bit more active in trading, you need to be a little bit more aware of the markets that you trade. So if you are in, you know, let's say you want to be a day trader, I would really stick to one or two currency pairs. I would try and understand those two currency pairs to the best of my knowledge before then trying to get involved on a day trading perspective. You know, I traded Euro futures for a good period of time, right? But sometimes as your workload increases elsewhere, you've got to try and take a little bit of a step back on things and do a little bit more, you know, higher time frame stuff. And I think higher time frame trading can be frustrating, because you probably see across social media these people that make 15, 20 to 1 on a trade. How believable that is, I don't know. But if you were trading large amounts of capital, I really, really doubt you'll be trading sort of in and out on a 5-minute time frame on some of these currency pairs. I think you'd think about it a little bit more, just because the psychology of losing a lot more money would be behind you as well. So let's go move on. Let's move on to some other charts of interest. Like I said, I did like the idea of sort of Aussie yen short this week and CAD yen short as well. CAD yen has come up into a range high. So we kind of discussed this in terms of the Bank of Canada announcement yesterday. I like the idea that we were getting that announcement as price was approaching a range high as well. You know, my feelings about trading ranges, I think they're arguably a little bit easier to trade than the trend, because you've got those defined zones that you can work with. And this 110 area here on CAD yen is a really obvious point of, you know, a really obvious point of an area of resistance. You know, we can see sellers came in here, sellers came in here in the past. So, you know, it makes sense to try and look to see if the same thing's going to happen again and to see if price can trade lower. Obviously, it's not 100%, but there's a good idea. So I'm waiting to see how this weekly closes. I think if we get a good, strong, bearish weekly close here, it gives us an idea to see how the market could maybe give us an opportunity on a lower time frame. Yesterday's close was bearish, which is good. If we look at the 4-hour time frame as well, look at the sort of price action of that. You know, very shallow pullback here after an aggressive move lower. Again, does that make you want to buy the market? That little pause here, does that make you want to buy the market? It doesn't make me want to buy it. You know, we've traded through lows as well, which is interesting. So I do like the idea of being short personally on CAD yen. I'm just waiting to see if there's any kind of decent setups. I was actually watching this hourly level of resistance today in here, because obviously price has broken down. You know, if I was looking at this again in terms of volume, let's grab the volume profile. We can see that there is low volume above this area here. Okay. Now, in low volume areas, the market can move very quickly. Okay. It can move very quickly. So if we were to see a break above this and a close above, I would expect the market to go and move to another area where value is being built, which is up towards the sort of 109 spot 80s. So this part here, this kind of area, is really crucial. Is really crucial. Okay. I think if we hold below 109 spot 40, then there's a good chance that maybe CAD yen can try and push a little bit lower, maybe towards this daily trend line of resistance. If we break and close above it, then the market may deem this area, right, as sort of an area of non-value anymore, and it will go search for another area of value or another area of volume. Okay. That's what the market tends to do. It just moves from points to point of volume area, and then the buyers and sellers battle it out to see if that is fair value or not. That's where you get these trading ranges from. Hi, Bongo. Compliments of the season. Thanks, mate. I hope you're doing well. But yeah, look at the sort of price action here as well. You know me, I like a price kind of staying above its averages. If I just bring back that 50 MA, we'll just put it on the 4-hour chart as well. Price has been sort of accepted above that 50 MA for a while. Okay, and it's actually used as a bounce on a number of occasions after we kind of traded above it down through here. The start of January, we're now back below that. You know, we're back below the averages there. Is that a sign that maybe the tables are turning here and that we are going to see a bit of downside to come in the market? So I do like the idea of CAD yen. I'm just kind of waiting to see if there's any kind of opportunities surrounding that. Obviously, the Bank of Japan held interest rates in the negative. So that wasn't necessarily positive, but are we going to see them kind of lay the roadmap now for the potential for a rate hike this year? I would say it's highly anticipated that we are going to see a rate hike from the Bank of Japan. So they've got to be careful. I think they don't want to spook the market by necessarily saying that they're not going to move rates, and that could obviously spark some very fresh and aggressive selling of the yen. So I think they've got to play the market quite carefully. I think 𝖢𝖣yi's got to play it very carefully in what he says because he doesn't want to spook them into thinking that they're not willing to come out of negative rates. Like I said, I think that would spark some very fresh selling in the market of the yen if that was to occur. So it'd be interesting to see the yen dynamic this year. That is something that I am very, very interested in. Let's go take a look at dollar yen, and then we'll go over to gold. Bongo, yeah, been busy with work. That's why I haven't been able to watch your videos. No worries, Bongo. Absolutely no worries at all. You can hopefully catch up on them a little bit. Sorry, guys, just had an alert go off. Let's go take a look at Bitcoin as well. We were on about potentially looking at Bitcoin opportunities. Obviously, the Bitcoin price has continued lower. ETFs coming in haven't really boosted or bolstered any kind of buying into Bitcoin yet. We've actually seen a lot of downside. We kind of peaked at the 49k mark, and I mean, this was an area of resistance we pointed out, which was this high back in April of 2022, that 48k level. The market has kind of since pulled back from that. My alert is still set at 37.39.1. That is my area of interest, and the reason is, again, we've kind of got that sort of consolidation before a large breakout. If we look at it in terms of volume profile, there is a lot of volume that has been built in and around this area. So I'm expecting the market to come down a little bit further. I like the idea of price coming into this volume area here. If we can try and find a bit of a base there, then I think that the price of Bitcoin could potentially continue higher at that point. You know, if we look at it from a weekly perspective, we've technically got a bit of a bullish run going on here ever since we breached sort of 32k, really, ever since we kind of took this May high out of 2022. We've been fairly bullish. We had a bit of a pause here, which is why I think this is a good area to potentially see some buying coming back in again. So I don't necessarily think the Bitcoin rally is done here, to be honest. I'm just going to bide my time again, just to see if we get a little bit of a dip into this zone. I'd like to see a rejection of that zone for then maybe an opportunity of a continuation. You know, will we see the 64k mark again? That is the sort of question on every Bitcoin holder's mind, I guess, is to, are they going to ever see that sort of heights that they've previously seen? I think it probably will at some point reach those all-time highs again. You know, if we look across other kind of risk assets like the stock markets and things, they've all made new highs again and continued higher. So there's no reason why necessarily Bitcoin couldn't. Obviously, it's a different kind of value, isn't it, in Bitcoin? It is a little bit more just kind of driven by retail, really. So now we've seen a lot of more institutional money come into it. You know, we might see a little bit more institutional effects of it in terms of seeing a little bit more downside before quite an aggressive upside move. Just discussing gold then, same as Tuesday, really, when we did the live stream. We haven't really moved much. I got stopped on a trade here. I went short in and around this area, around about that $2019 $25, and price rallied. Didn't like the price action, so I exited my positions on this. My full stop loss was above this swing high, and my targets were down here at 1977. So I cut my loss fairly early. Didn't like the price action what was going on gold, and you know, I was right to do so because I would have took a full loss here, but I didn't in the end, which was fortunate. And prices basically just formed a consolidation and broke out again. Now, I did say if price got back below the 2019 spot 25 area and retested, I would like the idea of being short again. I think maybe I was just a little bit early to the move here. I do like the idea of price coming down to this area. Again, if we're kind of thinking volume, there's high volume here, very low volume there. You know, the market can move quite quickly through those points. So I do like the idea of being short gold, in line with the sort of theory of being in the US dollar as a sort of buyer. Let's just have a quick flick over. I just want to see what the the hourly chart's doing. So yeah, we are starting to see some selling coming into that at the moment. I just think where's the I always think if I'm going to get in a position, where am I going to put my stop loss? That's my first thought. My first thought is, if I'm wrong, where am I going to be wrong? And, you know, I like to think, okay, well, here I just might be wrong. If I put a stop loss very close like that, I might be wrong. You know, we can easily get a spike into that and then a continuation down. Really, I'm wrong above 2040. You know, my original or my previous stop loss was here. And I got stopped out before price kind of consolidated. So really speaking, if I'm looking at it in terms of risk reward ratio, would I want to be short here? Well, if I was, let's just say I did, and I put my stop loss above that high. This is why I like to use these tools, because it kind of just gives me a quick visual on sort of risk reward ratios. That's only a 1.3R position, which is okay. It's okay. But how do we maximize that, right? How do I maximize the most out of that position? Now, if I try and get back in at that 2019 and a quarter, I've maximized my R rate to 1.85. If I try and see if price will come back towards 2030, I've got a better risk reward ratio. It's like 4-1. I don't think we'll see that. I think if we hold below this level, I'm not necessarily thinking that we're going to come back up towards that level there. So it's a tricky one. It's a tricky one. The only other idea we have, sorry, let me take the volume profile off. The only other idea we could necessarily have is if price doesn't come back to 2019 and a quarter, if it breaks and then comes back in, maybe we could have sort of an entry in here, stop loss above those highs at that point, and then look for the greater risk reward ratio trade, because at least then we've got the opportunity to be wrong above that level a little bit more than it would be now. So yeah, let's say it broke, it retested the lows, stop losses can go above sort of the highs there. Again, we've kind of increased that risk reward ratio at that point. So that's what I'll be looking at there for gold. I'll wait to see how it reacts. Can it breach these lows? So I'm going to put in a little alert here. I want to see how it performs below these lows, if it can get there. If it does, there might be something on a retest that we can look at for an opportunity to the downside on gold. So have a quick look at the FTSE. I like downside on the FTSE. Obviously, we were talking about shorts below 76 or yeah, this on a 76.50 level. That's performed pretty well. And now we're kind of, again, in a bit of a weird sort of pullback. The market hasn't really been aggressively bought up. We've stayed within this kind of bearish candlestick range at the moment. So I'm looking to see how the FTSE will react here. Are we going to see another bit of a drop in the FTSE, maybe in a move back down towards the range low at 72.80? That could be something to keep an eye on. 4-hour chart, very, very appealing, especially because we're kind of failing here. When price starts to fail to make new highs in a downward trend, okay, so obviously when you're in a sort of longer term sort of downward movement, within that area you get the trends within on lower time frames, right? So if we are in this sort of pullback phase, right, which is this area here, you would expect the market on a lower time frame like the 4-hour to make higher highs and higher lows, right? When that transition changes, does that mean that we're going to transition back into sort of an impulsive phase? And that is what I'm kind of seeing here at the moment. If we check out the highs here, they're getting higher, but now they're starting to sort of fade a little bit. So is this the time now to think, Okay, well, if we make a new low on the 4-hour time frame, if we breach that low in there, is that going to be the potential start of a downward move? First targets can be previous structure lows, and then we can leave a position open to see if it can kind of go the rest of the way there. That's my kind of thought process behind the FTSE. I'm going to put an alert slightly lower because I want to see if it can breach that sort of low that's been formed here on the 4-hour time frame. At the moment, if it doesn't, like I said, if we kind of fail here and price breaks to the upside, then we know that we're not looking at the right thing at that point, and the opportunity probably isn't there. So I will I'll set an alert a little bit lower, see if we can breach back below. Highs are not really getting higher that much, you know. Can that be a point of a potential pullback coming for or another sort of impulsive phase? I'm looking more at the daily time frame. If we get another impulsive phase like that, could we see price kind of come into these lows, or bigger picture, can it come into the weekly sort of range lows? That's kind of my kind of thought process is there. Vincent, pound Oz, please. Looking for longs. Yeah, I think you were looking for longs on Tuesday as well, no? It's just still at resistance for me. Still at resistance. I think there's better markets to go and trade. Right. This market is very sort of bunched up at the 1.9334. You know, if we were down here and we were trending towards that point, then I think great. You know, that is a good position to kind of be in. But at the moment, I just don't see. Again, try and think of where your value is. Where's your risk? Where's your reward? Is there any value in that kind of move higher? Is that going to benefit you getting long there? I'm not too sure on that one, Vincent. I might be wrong, obviously. I might be wrong. But just from my experience, that is a big resistance point. I think the market could hover there a little bit. I want to be in a market that's moving. That's got a bit of momentum behind it. Earth, yeah. Hi, John. Can you please look at NAS 100? Yeah, absolutely. Let's take a quick look at the NASDAQ. I mean, yeah, new highs. Wow. It's funny because whenever we come into these things and we see, like, after a sort of period of downside and a breakout to the upside, we're always kind of thinking, can it really continue to go higher? Can it continue to push and make new highs and rally further? And a lot of the times we kind of put ourselves in this position of, nah, surely not. Surely it can't continue to make a higher move there. I think if we thought that here back in 2020 when we had that drop of COVID and we then made new highs, we probably thought there is absolutely no way that we're going to see a huge sort of rally. And if that was the case, we would have missed out on a 71% rally there. So could the NASDAQ trade higher? Absolutely. I haven't really kept up on any kind of sort of quarterly earnings or anything like that recently. So I haven't really checked into any kind of big stocks that are involved in the NASDAQ. So not too aware of what's going on fundamentally. I'd have to do a little bit of research on that. I've been focusing more across FX at the moment. But yeah, I don't see any kind of opportunity here right now. If we pull back into sort of the previous highs, you can see we've got, obviously, from a technical perspective, we've got these previous highs which were resistance, could act as support going forward. So maybe set some alerts down through this area here, and if price comes back, I'll set an alert as well. If price comes back to that point, then you've got some potentially good value getting in here on the NASDAQ. But yeah, I mean, I thought the Dow would be the one that kind of pulled back a little bit, which it is starting to. But we didn't get below this area of resistance. There's been a heavy selling from the Commitment of Traders report on the Dow. And if we had breached this level here, I think that we could have seen quite an aggressive move downwards towards the sort of 36K area. We didn't get that in the end. Price did find support at the range low and rallied. We've breached that now, and we're kind of at that range high. So the Dow could be one to watch in terms of, you know, are we going to see another little bit of a bullish rally from the Dow Jones in and around this area here? So I'll be watching the Dow quite closely, watching that daily price action. I mean, let me just zoom right in just so you can see that. I mean, look at that. It doesn't seem to me like there's a lot of selling going on here on the Dow at the moment, does it? So I think maybe breaks above current daily high would be interesting for a potential long perspective from my point of view. I thought that because of the heavy selling pressure, there might be a little bit more of a hesitant to get long here on the Dow, but that wasn't the case. Prices obviously rallied. And it probably gives the opportunity for the commitment of traders or the commercials to actually sell a little bit more. But I don't think we're necessarily at an extreme yet on the commitment of traders report. Let me see if I can get that back up. Sorry, Royston, I can see your message. Sorry, let me get to that. Hi, John. I'm in a long trade with crude, got in on a pullback at 72.62, targeting $80. What are your thoughts? Yeah, let's go take a look at crude then. I haven't actually been looking too much at oil. It was kind of trapped at that sort of 74 area, $75 area. But it looks to be potentially breaking out of that. It's still a little bit choppy to me. I like the $80 target. I like that a lot because you've got those sort of areas in here, haven't you, where you've got resistance. So that is a good area to target for a long position. I would just be a little bit aware that we are kind of coming into that sort of high. I'd be more comfortable, put it this way, I'd be more comfortable if price kind of closed above that area there. I'll be more comfortable playing the lower time frames to the upside into $80. Where did you say you got in? 75 or 72.62? So you're actually in from a decent level anyway. So that's about there, isn't it? This area here, nice. So off that kind of low. So, I mean, depending on your risk reward ratio, I mean, if I was in here and I had a stop loss at sort of $72, was in at 72.60, then I'd be happy with taking some out of that. And then just the best thing you can do is if you're in a position where you've got some profit in it, the best thing you can do, I feel, is take some of that profit out of it, move your stop loss to break even, leave your $80 target in and see if it gets there. That's the best way I would look at it, because then at least you've still got some skin in the game. Okay, you've still left some skin in the game and you've got your opportunity to reach $80. If you cut the trade now, obviously you get the benefit of the full position, but you may miss out on that move up to $80 if it does go. Alternatively as well, it could come all the way back to break even. But if you feel that price is going to make it to $80, that's the way I would look at it. Put some money in your pocket. Yeah, trailing stop, cool. Yeah, just if you're comfortable with doing that, Royston, yeah, just trail your stop. If I was to trail my stop loss, I'd either trail it below the lows or trail it at the 50 MA. That's where I'd kind of think about it. Remember, the profit's better off in your account than it is opening the market, okay? No worries. Right, we've been running for about 45 minutes now. That's usually how long I like to go for. I don't want to bore you guys too much with analysis, but I will leave it there. Like I said, we've got the ECB data coming up shortly as well, so don't forget about that. That is some big data coming up at 1:15 p.m. So if you are in the market and you are in Euro specifically, maybe look at managing your positions. You know, don't give too much back to the market. So think about that. We've got some dollar data coming up as well a little bit later. So hopefully we get a little bit of movement from that. But I'm going to leave it there. Thank you to everybody that joined me today. I really appreciate it. Thanks for the likes. I can see the likes on the on the videos already, so I really appreciate that. Just going to give a quick shout out to everybody that commented: Vincent, Krishna, Bongo, Earth Media, and Royston. Thank you very much for your comments and questions. Really appreciate that as well. And thanks for taking your time to watch today. My name's John. So hit that like, hit that subscribe button, and I will catch you next week on Tuesday. Cheers, guys.